Advantest may be the most important AI stock that many investors outside of Japan have never heard of. Together with Teradyne, it forms a near-duopoly in chip testing, the critical gatekeeper every AI chip must pass before ever reaching a data center. Both companies posted blowout second quarter 2026 earnings, but while Teradyne is trying to break into the AI space, Advantest sits directly at the center of Nvidia's testing supply chain. And when I compared Advantest directly with Teradyne, the results surprised me. So the real question is, which company will win in the long run and offers the better investment opportunity, Advantest or Teradyne? Let's find out. My first question is simple. Can competitors realistically disrupt this business over the next decade? For Advantest, the answer is a clear no. Morningstar rates the company a wide moat, driven by proprietary tech and massive switching costs. Advantest designs testing equipment for the world's most complex semiconductors, including AI accelerators and high bandwidth memory. Building these systems requires decades of specialized engineering, making replication nearly impossible. Plus, chip makers integrate Advantest software and hardware directly into their manufacturing lines, making switching to a rival incredibly costly and risky. But the real superpower here is the industry structure. Advanced chip testing is a duopoly between Advantest and Teradyne, who together control over 80% of the market. Teradyne is a formidable rival with deep ties to Apple and TSMC's mobile ecosystem. But AI is where Advantest pulls ahead. Advantest holds a dominant position in Nvidia and AMD GPU testing, the highest growth, highest margin segment of the market today. While Teradyne is trying to gain share in next-generation AI chips, Advantest is already the entrenched incumbent. It isn't just selling equipment, it is the vital quality control gatekeeper for the global AI boom. Before we get into the numbers, every chart and financial metric in this video comes from Fiscal AI. I use this platform for every stock analysis on the channel. Check out the link in the description or pinned comment below for 15% off. Does that moat show up in the numbers? Absolutely, and the contrast with Teradyne is significant. Look at the capital efficiency metrics. Advantest has a 60.5% return on invested capital and 57.6% return on equity. Teradyne comes in at 19.9% return on invested capital and 20.4% return on equity. Keep in mind, Advantest reports on a March fiscal year end, but that doesn't change the underlying reality. A 20% return on capital points to a great business. But a 60% return on invested capital is elite. Advantest is squeezing 3 times more profit out of every dollar invested. And that profitability is expanding as AI chip volume scales up. Advantest is the clear winner here. Now the growth story is where this comparison gets fascinating. Looking back at historical compounding, Advantest has simply been in a different league. To keep the comparison fair, I measured from 2017 onward, since Teradyne reported a net loss in 2016, which would distort its earnings per share compounding math. Advantest has grown earnings per share at a compounded annual growth rate of 39.1%. Teradyne comes in at a CAGR of 13.3%. Advantest didn't just win, it compounded bottom line earnings per share at nearly 3 times Teradyne's rate. Both companies supported this per share growth with buybacks. Advantest repurchased roughly $700 million of stock in fiscal 2026, while Teradyne bought back a similar amount in fiscal 2025. But forward analyst expectations tell a very different story. Advantest is expected to grow earnings per share at a CAGR of 28.8% through fiscal 2029. Teradyne is expected to grow earnings per share at a CAGR of 63.8% through fiscal 2028. Why such a massive shift in forward growth? Advantest is already the primary testing supplier for high-end AI GPUs. So its growth, while still incredible, is normalizing off a massive baseline. Teradyne, on the other hand, is launching from a lower base as it aggressively works to capture market share in next-generation AI testing, with its 20% compounding robotics segment providing an extra tailwind. So the growth verdict comes down to this. Advantest wins on historical earnings per share execution, Teradyne wins on near-term expected earnings per share acceleration. Financial strength is where Advantest becomes almost unbeatable. Advantest holds roughly $2.1 billion in cash against only $0.1 billion in total debt, so debt is practically a non-factor here. Teradyne is also financially sound, holding $0.3 billion in cash against $0.3 billion in debt, but Advantest's fortress balance sheet is clearly on another level. The cash flow story makes that edge even more dramatic. Advantest has grown free cash flow at a CAGR of 37.8%. Matching its 39% earnings per share compounding, that is a hallmark of high-quality earnings. Teradyne has grown free cash flow at a much slower CAGR of 2.2%. Generating roughly $1.9 billion in annual free cash flow, Advantest could wipe out its entire debt load 19 times over in a single year. Teradyne covers its liabilities with ease, but its underlying cash generation has lagged behind. The financial strength winner is Advantest. Now let's look at valuation. Advantest trades at a forward price to earnings of 33.9, above its historical median of 23.1, but well below its peak of 60.4. Teradyne trades at an even richer 41.5 times forward earnings. So on a simple PE basis, Advantest is actually cheaper. But the clearer picture comes from the price to earnings growth ratio, which adjusts valuation for long-term expected growth. Based on long-term expected growth of 34.5% for Advantest, its PEG ratio comes in at roughly 1. Teradyne's expected long-term earnings per share growth comes in at 28.6%, which gives a PEG ratio of 1.45. A PEG ratio below 1 is widely considered the sweet spot for high-quality growth stocks. This was the biggest surprise of the analysis. Despite having a wider moat, higher returns on capital, and a stronger balance sheet, Advantest is actually cheaper than Teradyne relative to its long-term growth. So which stock would I choose? After comparing both companies across all 5 key factors, my winner is Advantest. Advantest has a wide moat with strong GPU testing positioning. With 3 times higher returns on capital than Teradyne, it's a clear winner on that front. On growth, it's a split decision. Advantest wins on historical execution, but Teradyne wins on near-term expected acceleration. Advantest has an exceptional balance sheet and much stronger free cash flow generation. On valuation, it's cheaper than Teradyne, both on PE and price to earnings growth ratio. Teradyne remains an elite business with massive near-term upside if it succeeds in grabbing AI testing market share. But if I'm building a long-term portfolio today, I'd rather own the market leader that has already proven elite execution. The one caveat? Currency risk. Advantest reports in Japanese yen, meaning investors based outside of Japan face exchange rate fluctuations that can impact net returns. Even with that caveat, Advantest still stands as the fundamental winner. What about you? Would you buy Advantest or Teradyne for the next 5 years? Drop a comment below and don't forget to like and subscribe for weekly stock analysis videos.